And the markets are off 120 points with the Dow. This is Des, your host for the next few minutes. I'm the owner, president of freetradingvideos.com Incorporated, doing business as Grok Trade. Anyway, we are now looking at Tuesday, May 6, 2014. Many of us are voting today in the primaries. Hope you had a chance to do so in your neck of the woods. And here, taking a look at the markets as a whole. You have the S&P down 0.9%. The Dow down 130 points, down 0.8%. The Nasdaq off by 1.4%. Russell's off by 1.6%. Banks off by 1.3%. VIX higher by more than 4%. Ouch. Gold slightly in the red. Silver slightly in the red. Then we have crude oil slightly in the green. And the US dollar down 0.5%. Man, it's amazing that the dollar was down 0.5% and the markets were still in the red. Anyway, 0.25% down on the transportation index, utility index, off by 0.6%. And here we are looking at the S&P 500. We were talking about yesterday, if we could stay between these two lines. I left the green line in here at 1885. Then I had a red one. I think it was down here at 1879. But we just broke that with a vengeance, coming back down. And so we had this people buying this weakness and brought it back up. We went up several bars in a row. Yesterday, it dropped. People buying up that weakness. But today, we failed. So with all the optimism we had, we still sold off, giving back about everything on the whole expanded range candle that we had the day before. Very interesting to see it all given back, and we have a bearish divergence confirmed now on the MACD. You'll notice these four lines. I've got this diamond triangle. There's something called a diamond formation. And if you go to Investopedia.com and look at diamond formation, it's a train wreck. I don't know who the author is that put that information on there, but it is incorrect. One technician to another, get that changed. Anyway, we have the start of an unconfirmed diamond formation. Fairly rare, but diamond formations are more bearish than they are bullish. But let's talk through this. You rally higher here, then you go into what's called a broadening formation. Some people call them megaphones, other people call them alligators. I call them alligators because you got a mouth opened up. And I have a lot of Cajun roots in my family, and we know not to go swimming in the bayou in Cajun country. And anyway, on a broadening formation, usually those are more bearish than they are bullish. However, now when something goes into a symmetrical triangle, right after a broadening formation, that is a formation that can break out either to the upside or the downside. However, they say they have a bigger chance of dropping to the downside than to the upside. If you'll notice here, you have a shoulder head and then a shoulder, so it wouldn't surprise us to drop down because this could turn out to be a trend reversal pattern with the head and shoulders trend reversal pattern in place. So if this diamond holds its pattern, we should drift down to about where this red area is, find support, and then pinch, looking for a breakdown to the downside. So that is some information. And a couple things here. This was a trend reversal or a candlestick reversal pattern. If you would have seen that, you would have saw that we had this big drop coming. Down here, this is a candlestick reversal pattern. If you would have recognized that during the time it happened, you could have been there ready for an up leg. We're going to be teaching candlestick reversal patterns at the end of this week. Check your email. If you guys registered with us, I sent everybody an email today. Get signed up, or just come to the website, go down here to upcoming events. We're going to do the event 3 times. It's very popular. We have to cap it at 500 people. First come, first serve. It's free. Hope to see you. Catch you guys later.